Hello and welcome to webinar 3. This webinar is called Working with Lenders. You learned how to put together your financials, and now you're going to learn how to use your financials and your analysis and take them into a lender, or take your financials into a lender and have them help you with the analysis themselves. I'm Sarah Horner. I am an agricultural loan officer at Flanagan State Bank, and I'm also a farmer myself. So with that, let's go ahead and get started. Here's our agenda for today. We're going to talk about what to look for in a lender. We're going to go over direct and guaranteed FSA loans. We're going to talk about Rich's 9 C's of credit, what to provide to a lender, credit scores, and some risk management. So first off, what to look for in a lender. Find a lender that you can trust. Find a lender who will be a good partner to your operation. They're going to know a lot of information about you. So just make sure that you are comfortable with whoever you're giving that personal information to. So find someone you can trust. Find someone who's going to be a good partner, because they really are a partner in your business. Next, communication is key. Look for a lender who communicates with you and you can communicate with them. This could mean, can you get a hold of them? Are they hard to get a hold of or get a return call from or an email? Or it could also mean, how do they talk to you? When they talk to you, do they talk in a way that like you understand, or are they just talking over your head? Someone that speaks your language. Then find someone who is knowledgeable. Find a lender that understands your business and is a good partner for your operation. This one is kind of important when it comes to agriculture, because farming and agriculture are so different than other industries. So, you know, a lot of times we only get paid during one time of the year. And so you have to kind of spread it out. And then you have these times right before your crops come where you're probably going to be running lean and everything. But understanding the industry, understanding what you're doing is a big deal. Dedication. Find someone who will be there through the tough times, not just the good times. It is really easy for a loan officer to be there during the good times, but when it's the tough time, that's really when a loan officer should be rolling up their sleeves and doing whatever they can to help you get through those tough times. So find someone who is dedicated to you, that won't just cut you off when the times are tough, that will work with you to get through those hard times. Next, let's talk about cash flow versus collateral lenders. You need to find a lender who cares more about if you cash flow than how much your farmland or your machinery is worth. Okay? This means they're invested in you being successful. If you have a positive cash flow, then your farm is profitable. If a bank only cares about how much farmland or machinery you have, then they are only focused on you failing. One little caveat with this: it's not to say that bankers and lenders won't need some sort of collateral, but their focus should be on you succeeding, not on you failing. Every year, they should be willing to sit down with you and go through a cash flow projection to see where you're at for the rest of the year, and also willing to help you update that projection throughout the year too, if that's something you would need. Because you can't look at the past to how you're going to pay your loans for this upcoming year or the next year after. You have to look at projections. You have to make sure your customers, as a lender, you have to make sure your customers are profitable. Otherwise, they're not going to be able to pay back their loans. Okay. And if they're only worried about you having land and just taking your collateral and going away, they're basically saying, well, good enough. And if something goes wrong or you default on this, we'll just take your farmland. Okay. Have a hands-on investor that is a good partner for you. And a good partner cares about whether you're going to make money. So let's talk about FSA loans. Why choose FSA loans? You know, who wants to work with the government? Well, they're low interest rates. They're way lower rates than any other bank could offer. They're favorable terms, meaning they can really amortize those loans out. You have special priority loans for beginner farmers and socially disadvantaged farmers. It's a place for farmers to go if they cannot get regular financing. Those beginner farm loans that I just mentioned before, you don't have collateral to usually pledge, but a FSA can take on higher risk loans like beginner farmer loans better than normal banking institutions. Your FSA loan officers can be an objective third party to your operation, okay? There's someone that sees all types of farmers, all types of agriculture. They're gonna have an idea of the ebbs and flows of your industry. So they're an objective third party that are gonna be like, they may say, why are you doing something like this? Have you tried it this way? You know, I know a lot of people that do it this way. That's part of that knowledge of finding a loan officer. An FSA loan officer is knowledgeable. So let's talk about FSA direct loans. An FSA direct loan is what it sounds like. It's between the FSA and the farmer. You have fixed rates, no prepayment penalties on a lot of them. The terms in the loans depends on the type of loans, ownership up to 40 years. You're not going to find a lot of banks that are going to be able to have a 40-year land note. They're going to say 30 years or less usually. Operating notes of up to 1 to 7 years, which is really good if you're trying to get started because operating is hard to come up with. They also have emergency, use, ownership, operating, and farm storage. That farm storage one is incredibly important for specialty growers. If you are specialty growers, and it's not just for organic row crop farmers who have to put up big bins, that farm storage loan program, it counts towards freezers, storage buildings for produce. I mean, there is a very long list of things that is applicable to farm storage. So going through the FSA, if you need to get some storage, so if you're a specialty grower and you have produce and you need that produce to last longer and you need something to help you do that, or a freezer or something, you can go look at the FSA and see if that's eligible and go through the FSA to help you with that. So let's keep going on the direct loans and talk about some key components and benefits of them. So over on the right there, you see just a handful of them there. Direct ownership loans have about $600,000 maximum amount is what you're going to see. Like I said, you have term up to 40 years. And what is the benefit of that? Lower annual payments. It frees up your cash flow on an annual basis if your loan payment is lower. If you were going to pay off a $600,000 note over 10 years rather than 40 years, that's going to be higher payments, or even over 30 versus 40. Again, you're just reducing it just enough that it's going to be free up some of your cash flow. Like I mentioned, lower interest rates. As you can see over there, like the direct farm ownership participation, if half of the loan is provided by a banker and the other half is provided through the FSA, you can get really low rates with a floor of 2.5%. That's a floor. And that, even with interest rates as low as they are right now for banks, that is lower than most banks can offer. Participation loans, like I just mentioned, they still give you the benefit of the FSA rates if 50% of the loan is provided by another lender. So let's say you have a lender who you absolutely love working with and he or she is a great resource. You still get to work with your lender. I mean, you can still work with them anyway, but on that land note, you would have half of it through your lender, the other half through the FSA. Microloans. Microloans are good options for small specialty growers. So if you're someone who has produce that goes to CSAs or farmers markets, microloans allow you to borrow a small amount, and it's good for small farm purchases. Okay, you could purchase a farm. You may want to construct a building on there. As you can see on the right, there's soil and water conservation, help pay closing costs. And once you pay down that $50,000, you could potentially take out another one and kind of keep rolling it until your business is where it wants to be. Here are some more direct loans. You have your direct operating. So direct operating can help you get started or help you recover from a bad farm financial issue. In 50 years of farming, let's say a full career, you know, you have decades upon decades of farming, you're going to have some bad years, some tough years, you know, where it's tight, money is tight. They are able to offer loans to higher risk farmers than a lot of lenders. They don't require as much. I mean, they require a lot of information, but they just can take on that risk. So you can have a loan that's termed out from 1 to 7 years, and you have an operating note with the FSA. So if you have to pay all these upfront costs before you even get your crop in the ground, this operating line can help you get through that. Again, there's micro loans for operating too. So if you're a smaller grower, you have produce farmer, just farmers market CSAs, direct operating micro loan might be a good idea, okay? And finally, you have direct emergency loans, which are rare. And that's an extremely good thing, because the only time we would be eligible for this is if you would be eligible for this is if the President of the United States declared your county a disaster zone, or you're one of the other surrounding counties. Sometimes it goes into the other surrounding counties as well. So you don't really want to ever deal with a direct emergency, because at that point, things are probably really bad if the president has to declare us an emergency area. Okay, let's talk about guaranteed loans. Guaranteed loans are the FSA, the bank, and the farmer. So in this one, the bank is mandatory. You have to have the banker in here. 90% of the loan, up to $1.75 million, depending on the program, is available to you through guaranteed notes. So you notice our limits with the direct programs tended to be $600,000. Now we're shooting up to $1.75 million. Again, you have the fixed rate, no prepayment penalty, and you can use it for conservation, operating, ownership, land contract guarantee, basically a lot of the same stuff you did with the direct loans. And I know I'm biased, but you still get to work with your local lender. So if you have a local lender who you absolutely adore and you trust them, like, you still get to work with them. Here's the other nice part. The guaranteed portion does not apply towards local lender limits. Therefore, it allows lenders to offer higher credit limits in-house. What does this mean? All right, simplified version, let's say you're purchasing a farm and it's $100,000. If you were going to do that loan in-house at a bank, most banks would say you need to put 25% down. So you'd have to come up with $20,000. Now, imagine the way land prices are today. Most land prices, you could get 100 acres and have well over $1 million. So you could be talking $200,000 on some acres, right? But just for simplicity, we'll say $100,000 small acres is what you're looking at. So you'd have to come up with $20,000 for a down payment, but you can't afford that. Something that will help reduce the risk for banks is a guaranteed loan. Basically, let's say that the FSA says you don't need to put any down payment down. You know, we're okay with it, and all that, which they rarely do. They usually want you to have some skin in the game, but not as much. So they say you will cover 90% of that loan. So essentially, let's say there's no down payment. That means the bank's exposure on that loan is $10,000. Whereas the FSA's exposure is $90,000. So 100% of the loan is housed at your local bank, right? But as far as the bank side of things, it's not as risky because 90% of that loan is guaranteed by the FSA. And that's a big deal. That type of shoring up risky loans allows bankers to use it as a tool to help farmers expand. And, you know, more often than not, we use it on land purchases. So let's talk about some key components and benefits, which you already have, but let's keep going. Again, you get to work primarily with a lender. You know, if you like your lender, that's a good thing. Lower interest rates than most in-house bank loans, especially on long-term debt, such as purchasing land. Having a fixed rate for 30 years is phenomenal. Think about right now and how low interest rates are. And if you were going to lock in a rate today, you had that for 30 years. Interest rates have nowhere to go but up, but you already have locked in that lower rate. Okay. In-house banks, most in-house banks would not be able to do that. And if they did, they would need additional collateral to do it. Okay. But get an FSA guarantee, you can lock that in. And talked about the fixed rate. You have higher maximum loan amounts than direct loans. We talked about that too. You have 1.75 million versus 600,000. Before we move on for that, you may be asking, well, why don't more lenders recommend we do this? Or why don't more lenders want us to do guaranteed loans? Well, one, banks don't get quite as much, make quite as much money on them, and they tend to be a little bit more work. So to do a guaranteed, like, you do have to provide a narrative and financials to the FSA, and there might be some questions. On direct loans, the FSA could ask you to take a financial class just so you have basic financial management skills, and they provide those classes, which again, if you haven't done one of those before, like it's not a bad idea to utilize that through the FSA if you are not sure what you're doing on the financial side. But that's why a lot of people, one, either don't go to the FSA, it's a lot of oversight, and two, it's extra paperwork. But if you have the right lender, a lender should help you walk you through that, okay? At our bank, as with a lot of other small community banks, we work with the FSA all the time. So we're kind of used to what they need and everything. And so basically it's calling up the customer and saying, hey, can you provide us this information? We're writing this part of the narrative, we're unsure. You know, it's filling in the gaps. So it kind of goes back to finding the right lender, someone who can communicate with you and will be there for you when you're going through these things. Find someone that'll help you through FSA, because the FSA is a very good ally to farmers. And how often can you say that the federal government is working in your favor? And this is one of the things, take advantage of it, okay? Next, we're gonna talk about Rich's 9 C's of credit, and you're probably thinking, who's Rich? Well, this is named after Rich Ritter. Rich Ritter is one of our loan officers here at Flanagan State Bank, and he's been in the ag lending industry for knocking on 40 years. So he's seen a lot of things. And if you Google 9 C's of credit, most likely than not, you're gonna come up with like 5 C's of credit. Rich throughout his career feels there's 4 extras, so we've added them in just to be extra thorough with this. So this is coming from someone who's worked with all sorts of farmers, all sorts of customers, and through nearly 4 decades in the ag lending business. And he's incredibly pro farmer, and this is kind of what he came up with that's important for people to know when looking for credit. 1, we're gonna look for your for capacity, your ability to repay your loan with normal conditions, okay? And now we say normal conditions because everybody's optimistic at a growing season, right? Like, oh, this is going to be the year, this is going to be the year. But we want to look at, you know, in a normal year, are you able to pay off your loan? Okay. Because in years where it's better, you may pay off more, and whereas it's worse, you may not be able to pay it all off, or make your annual payment, but maybe we can work something out. So normal conditions is a nice middle of the road for us to look at as far as your capacity, your ability to repay your loan. 2, cash flow. Do you have a break-even plus that is reasonable and work in a normal year? Meaning, do you have a break-even point plus, you know, a little extra on top that is reasonable and work in a normal year? Again, we go back to what we're talking about in number 1. We all think, oh, this is going to be the year, we're going to make lots of money this year, but it has to be realistic. Is your cash flow projection realistic, excuse me, and will it work in most years? Normal conditions, normal years. Capital, what's your down payment? How much have you invested in the business? So when a lender lends you money, that's them putting skin in the game. They have invested in you and in your operation. What a lot of lenders need, and what in fact most banks will need, is they will need to see that you have skin in the game as well, okay? You know, lenders, you have the benefit of working with them. If you use like credit cards, you know, you don't have a lender to bounce ideas off of. And in credit cards, they don't care if you have skin in the game. They just charge you an incredibly high interest rate, okay? But a lender's going to need to see you have skin in the game. Now, you're probably thinking, how am I going to do that if I'm just starting out? Well, there's things you can do. To get like a down payment for something, maybe you have someone co-sign on the note. That's a potential. Someone pledges maybe some collateral to help shore up the note. If it's something where you don't even have equipment and that's the only thing you're waiting on is equipment, maybe you can work with an established farmer and trade your labor for use of their equipment, okay? There's different ways you can go about it. So just because you're a beginner farmer doesn't mean you don't have anything to bring to the table. It just means it's different than just the traditional cash on the table or a tractor or something like that. It means you have other things to offer. We just talked about collateral. What's the security for the loan to protect your lender if you default? Again, number 2 should be more important to your lender than number 4, but all lenders will need number 4. You need something that if something should happen, that is, the loan is shored up on, okay? It's something that bank examiners require, but then not only that, it's another reason you have skin in the game. You know, it's not just us giving you this money, you know that something is tied to it. Contingency. We like to call these, what is your go to heck plan? What is your backup plan or emergency plan if cash flow does not work as projected? What do you have? Do you have crop insurance? Do you have farm blanket if something happens? Do you have health insurance? What happens if you are the main farmer and your crops have to come out? Do you have a contingency plan? Do you have someone that you can call and like, yeah, I'll call the neighbor up the road. They said they, you know, we're going to kind of back each other up there. Have a contingency plan, okay? Health insurance is part of that contingency plan as well, because if you have a major health issue and you can't pay your bills, we have seen it where they will put a lien on your farm and take the farm. At that point, you're not farming anymore, okay? And there's no point to the loan if you're not farming. So make sure that you're protecting yourself, that you are planning, hoping for the best, planning for the worst type thing, okay? The other thing we recommend is having savings of up to 20 to 25% of your net income every year. This is your rainy day fund. So in years where it's tighter or you're going to have a harder time paying off your notes in a given year or making your payments, you can dip into that rainy day fund and rebuild it in hopefully the next year, which is hopefully better. So have a contingency plan ready. I know nobody wants to think about this stuff because it's the negative side of things. We have to have a contingency plan ready. 6, what are the conditions? How are you going to use the money? What terms do you need for the loan? How many other risk factors are possible? If you come in asking for a $100,000 operating note for me, I'm going to need to know, okay, what are you going to use this for? In my bank, we do cash flow projections. A lot of banks, they will do cash flow projections because they want to see what your operating expenses are in a year and to see if that $100,000 is reasonable. If you're buying like a tractor or something, and I know you're like, oh, I want these payments to be as small as possible. Well, we say the lifespan of a tractor is like 7 years, 5 to 7 years. So most of the time, you're not going to find like a machinery note that goes past 5 years. So that's part of the terms of the loan, like how long do you want it amortized over, okay? What are the rates on it? Are there prepayment penalties? And also talk about any other risk factors that are possible. What's the risk in your industry? You know, what are the conditions under which you're farming right now? 7 is character. This almost should be number 1 because your ability to deliver what you promise to your lender is a big deal to the lender. It's a lot of money that goes into farming and to operating a farm. And if a lender is lending you money, they're a partner in your operation and they have to trust that you're going to be able to repay your debt. And if you can't, that you're going to communicate with them, which leads us to number 8, cooperation. Will you be easy to work with? Will you listen to your lender? And will you make changes if needed? I am one of these people that if you give me bad news, I dig in, dig my heels in the ground. No, I don't want to hear it, blah, blah, blah. Give me 24 hours. The next day, I'm like, all right, I've had my moment. What do we need to do to fix it? Okay. And that's what you want to find, not only in a customer from the lender point of view, but you should find in the lender, you know, are they listening to what they're telling you and what your struggles are? Are they easy to work with? It's the same thing. If I've got a farmer sitting on the other side of my desk and they're not doing very well financially, and I'm sitting here suggesting some possible fixes and they're just saying, no, I'm not going to change. We're just going to keep going. It'll be fine. That's an issue. Okay. That's not cooperating. Like, we have money in your operation. It is your operation. It is your decision overall. And in the end, but we're just trying to help you. Okay. So listen to your lenders too. The other reason is they work with other farmers. So they, like I said, with the FSA officers, they know what's going on in the industry. And some of us are actually farmers. And I always tell my customers, I'll never make you do anything that I wouldn't do on my own farm. Okay. And I think that's fair. You know, I wouldn't want someone to do something that I wouldn't be willing to do myself. We go back to that communications. Will you contact your lender to discuss what is going on, and will you return your lender's phone calls? We had this guy, and actually I think this was Rich Ritter, the richest 9 C's rich, he used to do hogs, and he was not going to be able to pay off something at the feed mill 1 month. And he went in, he goes, hey, I don't have the money this month, but I'll have it on this day and I'll pay you in like, 3 or 4 weeks. And the guy said to him, as long as you worry, I don't. And that's the same way we kind of look at it. As long as our customers are worried about making those payments, we tend to not worry about those customers. It's the ones that drop off the radar that we don't hear from that we tend to worry about. So it goes that way, where we need to talk to you. Are you going to return our calls? But then also, can you get a hold of us? Okay. Will you contact your lender if something's going bad? We talked about in the previous webinars, and especially in webinar 2, that you need to do analysis on your farms and know if there's issues before they snowball and they become really hard and painful to deal with. Okay. I would call your lender in the early stages being like, hey, I don't know if you're too concerned about this, but this is what I'm seeing. Can you work this out with me? They're a good third-party person to your objective party, to your operation to bounce ideas off of, okay? And don't be afraid to tell them what's going on, because maybe you can't make the payment this month, but maybe they can just extend it into next month and say, just pay it next month, okay? Not every bank will be able to do that. You're not going to be able to do that every time, but you know what? Every situation is different. Always communicate with your lender. That is something we look for in all of our customers. So let's talk about what to provide to a lender. 1, financial statements, everybody's favorite thing. They must be signed, must be current and accurate, and must show at least 2 years for comparisons. Again, notice how we're saying 2 years of comparisons. If you haven't been farming for 2 years, that's where that beginner farmer loan might be a good idea. But even with beginner farmer loan, you're going to need at least 3 years of schedule S before you can apply for those. So you're going to need a sign. Current and accurate is a big deal. Accurate is a really big deal. Then you're going to have your tax returns. Everybody should be filing taxes at the end of the year, and your goal should be to minimize your taxes, not to eliminate it. Don't eliminate your taxes. If you're not paying taxes, you're not making money. So you must provide the front 2 pages of the 1040. And then the Schedule F is an absolute must for farmers. And then also any other income schedules. If you are unsure what to provide to a lender, I would just hand it to them and let them pick out what they want. And if you don't trust them to pick out what they want, and you're like, I don't want to give more than they ask for, then maybe they're not the lender you should be working with. Okay, like that's part of that trust that we talked about right away on that first slide. So I will tell you right now, one of the first things I look for is I've got the front 2 pages of the 1040. I look for the Schedule 1. The Schedule 1 will tell me what other schedules I should be looking for. It should tell me if there's a rental property, if they're a landlord on farmland. It tells me if they're a farmer or if they have a Schedule C because of another farm or another non-farm side gig, or they own another business. Okay, so it tells me immediately what I need to pull. Okay, so there's an easy way to tell where your schedules are. Your records. Oh, if you watched the first 2 webinars I did, I really drilled home in you that your records are so important and the most important tool on your farm. We're going to need summaries of your accounting records for the past 3 years if you have them. Okay, and accrual farm income statements for each of the past 3 years. Now, you're probably saying, I'm not doing that accrual thing. That accrual thing was hard. I'm just going to give you my Schedule F. That happens, okay? I would say 20% of the people have accrual income. If you use FBFM, which primarily, they work with a lot with row crop farmers, you're going to have an accrual income statement every year. Some accountants do accrual income statements for farmers as well. But if you don't have it, it's not a deal breaker. If you have them, give it to your lender. The accounting records are basically so we can start looking at trends and seeing what you have. If you are a new customer and you come into me and I'm not really going to ask for your detailed records if I'm comfortable with where you sit on your income taxes, cash flow projection, in your balance sheet, but I would have them readily available. Acres and crops, actual full share acres of each crop or amount of each crop being grown. What is your 5-year production history if you have it? Again, what crops are being grown and sold, and your marketing plan. Do you have a CSA that you're a part of? Do you have contracts with local restaurants? Are you just going to farmers markets? If you're a row crop farmer, are you pricing your grain ahead of time? Are you contracting that out so you have that locked in? What is your marketing plan for getting your crops from the field to a point where you're getting money for them? How are you going to get that money? And do you have it locked in? Off-farm income and expenses. Any other income you want us to consider. Employment, work outside of the farm, expenses that are not related to the farm operation go in here. We're going to ask what your family living is. The last couple webinars I mentioned more than once that family living can often be a problem in farm families during tight years. And also it is becoming higher and higher every year simply because of the cost of health insurance. Health insurance is the biggest reason family living goes up. So we're going to ask about like your health insurance. That's technically non-farm, but it's a risk management for us, okay? So that's something we're going to ask for. Also, do you have an off-farm income? If something were to happen where your farm didn't do so well this year, do you have other income to kind of supplement it? It just creates a whole picture for us, a global picture of who you are as a farmer. Input expenses. You need to verify your actual farm input expenses with your ag suppliers and verify your loan payments with your ag lenders. A lot of times farmers may have, they may go through John Deere Credit to buy a tractor note. A lender such as myself would love to see a printout statement of your current balance on that note and how much time you have left. Your ag suppliers, I would contact them and make sure, okay, for next year, is this looking like a ballpark figure, okay? Or they may say, no, we got supply chain issues. It's gone up 200%, which with conventional farmers and nitrogen is kind of an issue right now. So verify that your actual farm input expenses are within the ballpark, you know, not only what you've had in the past, but what you're looking at in the future. Here's some more helpful reference materials. What is your farm lease? Do you have, are you renting a couple acres from a friend of yours or something? Like, what is your farm lease? What is the terms? How long is it for? Purchase contracts, like I said, if you've got like a contract with a local restaurant to provide vegetables and produce directly to them, do you have that contract? Local supermarkets, any custom work arrangements. Have you made an arrangement to maybe go help someone up the road bale hay and you get money out of that, or to trade labor for something? That's something to look at. Machinery, farm blanket insurance. If you are pledging any collateral that is machinery or is on the farm, we're going to require machinery and farm blanket insurance. That simply tells us that if anything should happen unexpected, that you are insured and basically the collateral is insured. And finally, a plot map showing each farm. Where is the farm? Is it good farmland for what you're trying to do? Or are you trying to grow, a crop that just doesn't make sense at all? Like grapes in a desert without irrigation. Like, are you able to do that? So let's talk about when meeting a lender. This slide makes me feel like I hear my mom saying this stuff to me, but when meeting a lender for the first time, remember presentation matters. And I hear my mother's voice when I say this. You know, it matters what you look like the first time you meet a lender, okay? Farming is a dirty job. You get dirt under the nails, it comes with the territory, but first impressions matter. Now, I'm not saying you have to wear a suit and tie, and although sometimes that might be something you need to do, but I'm saying nice pair of jeans, nice shirt, nice boots, you know, do that when you're meeting your lender, especially for the first time until they get to know you and you get to know them. Right now, my customers will come in straight from the cattle barn and I don't care. Like, I know them well enough, that's fine. If they were coming in for the first time for a loan, you know, I look at their financials and everything, but at the same time, you want to present yourself and your business as being a good risk for them, okay? So like I said, you don't need to wear a suit and tie necessarily, but clean pair of jeans, nice shirt, good clean boots. Presentation of financials matter. I was working with someone where I had to print out some financials that were done by self-employed farmers. And to print out these financials, it was hard for me to even read them, because although they had a system in there, it wasn't clear rows and columns, okay? They weren't clearly labeled. So I could kind of tell they put this part up here and they put expenses over here. And if I went somewhere in the middle, there's the, you know, here's the income. And I had to do that for like 20 different farmers. And took me forever. It was kind of a nightmare to go through. Although that system makes sense to you, it needs to make sense to other people, okay? And that kind of just leads to more questions, because a lender's going to be constantly digging through that. And they're going to have to ask, okay, what is this? What is this? Where if you had clear columns and rows, okay, there's no questions to be asked really, just filling in the gaps here or there, okay? Because we're clearly going to see, oh, that was your seed cost this year, or you paid for an irrigation system that year. So we're going to understand what's going on. And this sounds absolutely silly, but there are still people out there that print out spreadsheets and financials. So if you are ever applying for a loan or a grant, make sure that if you print out your spreadsheets, your financials, that they come out in clean pages, okay? Whether it's landscape or portrait, doesn't matter to me. More often than not, it's usually, it doesn't matter. Either way is fine. Depends on how you build it, but just make sure that the page breaks are clear. And I know you're saying this is ridiculous. No one does that anymore. That Rich of Rich's 9 C's, he does that. He doesn't use the computer he uses it for bare minimum. He prints it out. And there's times where I'm so stuck on something, I print it out and I like to make notes on it, okay? As a lender, we have to print out everything anyway. It all has to go into files for the bank examiners. So there are times where I check off something. So if you have your financials in a spreadsheet, make sure it's easily printed. Page breaks matters. And like I said, I had a CFO that really drove this home with me, and it drove me nuts, drove me bonkers to spend all that time putting these numbers together. And then I had to spend an extra 5-10 minutes figuring out the page breaks. But it matters, okay? Presentation matters. And it also shows us that you care about what you're presenting and how it looks, okay? It's the first thing that a lender or an investor is going to see, okay? All right, let's talk about credit scores. Credit scores are a small piece of the pie as far as what we look at as agricultural lenders. Okay, they might play a bigger role in like the residential side of things and all that, but in agriculture, a lot of agricultural loans are not even included on the credit report. So like if you get an operating line through us or a machinery note through us, that doesn't show up in your credit report. So for us, it's not a good indicator of your performance, okay? But at the same time, they are still important. And I would say nearly all financing and all banks will have to require that you have them. Credit report in the files. So they will still look at them. Like I said, we look at them, we consider them, but they're just a small piece of the pie. You have 3 major credit bureaus. You've got Equifax, Experian, and TransUnion. And most lenders will use the middle score. If you're worried about lenders randomly pulling your credit report, they can't. Lenders must have a legitimate business reason to pull it. Applying for a loan is one such legitimate business reason. It is really that tightly regulated, okay? Like you have to apply for it in order for us to run it. Let's talk about what affects your score. Payment history, paying on time is crucial. Balances compared to credit limit. You want to keep this at 30% or less of your credit limit of what you have outstanding. Length of credit history, older borrowers have the advantage. Keep your first credit card open if you can. One thing that my parents did for me when I was in high school is they opened up a credit card under my social security number and theirs as well. It was joint, and it was for like gas and incidentals if I was at band practice. But that stayed open forever. And as soon as I got to college and needed to buy my first car, I had credit history, okay? So even if you get a lot of loans through family and whatnot, I'd still get a little credit card paid off every month, you know, just so you can kind of build up that credit. New accounts and inquiries. Too many new accounts or applications in a short period of time can hurt your credit score. This basically shows us if you have we can see who has pulled credit reports on you on the credit report. I don't know, one of the last pages, it says what banks and when they have pulled credit reports. And if you have gone from bank to bank to bank looking for credit and you've gotten denied, that's kind of, you know, there's a reason why you're going to so many banks. So I would also say that if you were wanting to apply for credit, that you have a plan in place. You pick maybe 3 lenders, and these are your top 3 choices, and you're going to go apply with them and focus on those 3. Don't just have it like, you know, shotgun here, like just everywhere. Don't just send it out to everybody. It's not, it'll show on your credit report because every single one of those banks will run your credit report, and that can hurt your score. Diversity. If you have been responsible with a variety of creditors, this helps your credit score. If you know you have had your gas bill can affect your credit score, your electric bill can affect your credit score, you have your student loans on there, you have your car payment on there, you have your home loan on there. If you have a card, an account at like Menards or something, that'll be on there. It shows us that you can handle multiple things, okay? Your personal information, obviously that's on there, Social Security, all of that. Employment is actually on there, so we know where you have worked, and your previous addresses. So we'll know if you kind of been moving around a little bit as well. Financing history, like I said, what kind of accounts have you had, your loan balances, payment amounts, number of payments made, payment history, bankruptcy. We'll talk about what to do if you have a blemish like bankruptcy and judgments, tax liens, all that in a minute here, but all that stuff shows up. So if you have a car loan that you're done paying or a student loan that you're done paying, it's on the end of the balance sheet and we can see all the loans. We can just go through it and be like, okay, yeah, they're in good standing for everything, okay? That's also why it's very important to pay your student loans on time. Don't just ignore them. There's something that don't go away with bankruptcy, okay? They will be with you until you pay them. So that's why it's important to get those taken care of as soon as you can. Like I said, inquiries, all inquiries along as well as who made them and when. So we'll know who pulled the credit report and when. We won't know why, but we'll know when and who. So 10 steps to a better credit score. 1, know what your 3 credit scores are. I think it's creditkarma.com. You can pull a free credit report every year. Highly recommend you do that. Some credit cards on their apps will give you one of your credit scores as part of their service. So for example, I have a credit card that the app, I can look up my TransUnion one and it updates, I think every other week, something like that. So I'm always looking to see what's on there, what's my credit score, is there, you know, nothing wonky on there, you know, I can explain everything that's on there. Also, do not open new credit cards that you don't need, okay? Yes, it makes it look like you have more credit available, but if you don't need them, there's no sense to opening yourself up to that kind of risk. Try to keep your credit card balances as low as possible. Notice I didn't say to 0, I said as low as possible, okay? I pay off my credit card loan or credit card debt every month if I can. There are some months where maybe I can't do it, and that's understandable. Everybody's in that boat, but I would keep those as low as possible, not only for boosting your credit score, but also because you're going to be spending all your money on interest and fees. Correct any incorrect information on your credit report. Report it to the credit bureaus, correct it as soon as you can if you notice something is wrong. If something is not yours, call it in. You know, don't wait for too long. You know, identity theft is a thing, and this is one of your first ways you can catch it. If your credit is severely damaged or you have limited credit history, then consider opening a new account and keeping it in good standing. That'll kind of build up your credit score. If you fall behind on paying a bill because of illness, unemployment, or family issues, write a short explanation to the credit reporting agencies explaining your problem. If you need help managing your credit, contact a reliable nonprofit agency to help. If you have bad credit, you are not alone. There's a lot of people that have bad credit. I have a friend who said she had this huge amount of credit card debt. She maxed out all her credit cards, and she always said to me, I had a really good time in my 20s, and now in my 30s, I'm paying for it. You know, like she's building that credit score back up as she pays down her debt little by little. So you can manage it, you can improve your score, and there are people out there who can help you. Again, minimize the number of inquiries on your credit report. Don't go applying out there for every loan under the sun, okay? Make your payments on time. Ugh, this one is almost number one. It's the easiest thing you can do, right? Just make it on time. And continue to monitor your score and the information that's included on your credit report. And I cannot stress this one enough with all that's going on. Just think about how many websites right now house your credit card information. Like you have an Amazon, maybe Walmart has it because you get your groceries through Walmart or something just for easy checkout. It's a good idea to check your credit score. So if you have a credit card company that through your app, you're able to check your credit score on a regular basis, do that. Okay, make sure there's nothing wonky out of there, that all the accounts that are listed make sense, that they're yours. Let's talk about risk management. Farming is a risky business, okay? It is not easy to limit risk as a specialty grower, but there's some things you can do. One, you can contract your product whenever possible. Farmers markets are great, but there is competition at farmers markets, not competition. You have your other farmers that are there and everything. And so like, and what happens if it rains, that sort of thing. So they're a great place to have your product out and everything, but they also take a lot of time. You're sitting there for hours. If you can have something like a CSA, you're locking in customers. They pay you, and then whatever you have available, you get. You also have supermarkets. Local supermarkets will use local produce, okay? My supermarket will take eggs from a farmer from the next town over, okay? Find a supermarket. See if they would like any of your local produce that you're growing, because there are people and consumers who they just want local. They don't care if it's organic. They don't care what it is, as long as it's local. Again, I said CSAs. And then also work towards that having that rainy day savings. 20 to 25% of what you'll need in a year, okay? I would say 20 to 25% of your net income. You should be able to last 6 months on a rainy day fund, okay? Also insurance, farm blanket policy, health insurance, and there's a new USDA policy, which I'll talk about at the next slide, but I want to stick with farm blanket and health insurance for a second. Your farm blanket insurance will cover any incidentals that are on your property. So if you have a tractor, something happens where it gets damaged in the shed or whatever, something outside of your control, we know that's covered. So that's not just for bankers that you have to get the farm blanket, it is for your own operation. Farming is incredibly risky, and there's so much that is unpredictable on it. If you can have insurance on something, go ahead and get it. Health insurance. I know health insurance costs a ton of money, especially if you don't have a full-time off-farm job where you can get health insurance. That may be a reason that you may need to spend less time on the farm and get that full-time job to have health insurance. If you're not able to afford health insurance and you think, oh, I'm just going to go without, that's not a good idea in farming. Farming is an inherently risky occupation. And if you have a health issue and it costs a lot of money, they will put a lien on your farm and they will take your farm. I have seen it happen. Someone inherited 80 acres. 2 years later, they got sick and they went after their farm, and he wasn't farming even once he got better again because his farm was gone, okay? The other reason you need health insurance is you are the farmer, okay? If something happens to you, like you're basically insuring yourself. You're the best asset on your farm. You are the reason there is a farm, okay? And if you don't insure yourself like that, then you're basically saying, it's okay, it's not worth it. But for someone like a lender, it's incredibly important. It shows us that, okay, you're covered. If something should happen, you know, your assets are covered, your operation is recovered, or is covered. And once you recover from whatever's going on, you're going to get back out there and you're going to be farming again, okay? I know it's expensive, but find health insurance that works for you. Don't just roll the dice with this. Find health insurance, go to the marketplace, find something. Don't wait until you already have something going on where they can take your farm, okay? Now, let's talk about the new USDA insurance policy. full disclosure, primarily banks will work with row crop farmers in central Illinois. We're the land of corn and soybeans. So specialty growers a lot of times get overlooked. And I would say overall, small specialty growers by the USDA can get overlooked. I was thrilled to see that they have a new policy offered through whole farm revenue protection that protects small specialty growers. The hard thing with specialty growers is, for example, as a corn and soybean farmer, my corn and soybeans is an approved crop in the state of Illinois. Something happens, I'm covered based on that crop, and I have a yield history, okay? Whereas you, as specialty growers, if you are a specialty grower, you're going to have multiple crops. You're going to be growing all sorts of fruits and vegetables. So it's really hard for the record keeping part of that to get that insured. So basically this program includes no expense or individual commodity reporting needed. It simplifies your record keeping requirements as a producer. And it basically uses your revenue from post-production costs, such as revenues and packing commodities and value added are considered allowable revenue. That's a big deal. Those are value added products that you could have on your specialty farm to add diversity to it. And so it includes those in there as well. And if you look over there, that last paragraph there, it says it's available to producers who have a farm operation that earns an average allowable revenue of $100,000 or less. So that's really good. So that's protection that you may not have had before. Now, I don't know the nitty-gritty details quite of it yet because it is that new, and a lot of my contacts in the insurance industry, my country guy, all that stuff, they haven't had their winter meetings yet, but they're going to let me know as soon as that is available. So if you have questions later on that, feel free to email me, which I'll have here on the last slide. But I know a lot of small farmers don't want to spend the extra income on insurance, but over in this area, I'm in Leroy right now. Downs, Leroy, this area got close to 17 inches of rain in like 10 days, completely wiped out specialty growers this year, a lot of them, and that's a big deal. You get one chance per year to grow your crop, okay? So protect it as much as possible. So let's talk about my final thoughts. This one I say every time, don't try to keep up with the Joneses because the Joneses cannot keep up with themselves. Manage your records. What do I mean by that? It is really simple to get wrapped up into what your neighbor has. And, oh, I need this. And, oh, I need this new tractor in order to crop. Oh, everybody else has this. I should have this. Put your blinders up and grow as you are profitable, okay? Take emotions out of your operation, run it like a business. The first webinar we did in this series was about building your financials. The second webinar was about analyzing your financials. Do that and do that often, okay? Run it like a business. Like I just said, grow as you are profitable and as you can afford it. You put up blinders to what your neighbors are doing and do what works for you. Grow at your own pace, okay? If you grow at your own pace, even if it's a slow pace, you'll be fine. It's the fable of the tortoise and the hare, okay? Slow and steady wins the race, okay? Especially when you're growing a farm. The startup costs of a farm are huge, and to think you're just going to be huge overnight and be successful, no, it's going to take trial and error to get through that, okay? So don't try to keep up with the Joneses. And what I mean by what they can't keep up with themselves, a lot of those people that have all the new, and in particular, you'll see this in conventional row crop farming, all those people that have the new equipment, everything, there's usually debt attached to that. And they'll be like, oh, our yield was this much, and that's how they judge success. But this is a business. Success is judged by your profit margins. And their profit margins may be the exact same as a small farmer, simply because that small farmer does more with less, okay? So that's what I mean by don't try to keep up with the Joneses and that they can't keep up with themselves. Grow as you're profitable. And don't be afraid to ask for advice or help. Find people you trust. That was one of the first things I mentioned in this webinar. Find someone you trust. Consultants, ag lenders, marketing advisors. This is being put on by the Land Connection. Land Connection is absolutely a wonderful resource for organic growers and especially small specialty growers. And if they don't know the answers, they have such a deep network of people, they will find someone who does know the answer, okay? Don't be afraid to ask for help. As a farmer, I even ask for help, okay? I have to, there's things that I don't know. You have to know a lot of things to farm, okay? Don't worry if you don't know on everything, okay? Ask for help. It is okay. Ask for advice. You'll do yourself a favor and do it. You know, don't fail and then wish you had, okay? That being said, if you have any questions, please do not hesitate to reach out to me. That is my email address and my phone number with the direct line. Please reach out to me if you have any questions or you want to pick my brain on anything. I am happy to help in whatever way possible. I thank you for watching this third webinar. And if you watched the other two as well, I thank you for watching that. Thank you so much and have a good day.